Welcome to the UAE, welcome to Abu Dhabi, welcome to the capital. Ladies and gentlemen, on behalf of Ambassador Yusuf Al-Ateba, my boss, on behalf of my colleagues in Washington, D.C. at the embassy there, I'd like to welcome all of you to the UAE and to Abu Dhabi. I also want to thank Michael Milken for bringing this conference to my hometown. I also want to thank His Excellency Khalifa Butti bin Amir, Chairman of KBBO Group, for sponsoring this event here today. My name is Saud Nuwais. I'm the UAE's commercial counselor based out of Washington, D.C., and it is my honor to be moderating today's panel. Gentlemen, welcome to my hometown. If I may briefly ask each one of you to introduce yourself, the organization you represent, and then we'll jump right into our discussion. I'll start with
first. Okay. I'm Sumant. This is my first time in Abu Dhabi, so thank you for having me. I have been in the venture capital business or investing in technology since 2001. And over many, I'd say many companies, many decades, the platform that I'm part of, that I co-founded, March Capital, is multi-stage. It's headquartered in Los Angeles, very close to the Milken Institute, actually. We have offices in Northern California, in India, in Mumbai, Bangalore, as well as in Sao Paulo. And so some experience in investing in different economies, different geographies, different stages of development, though a majority of our activity is in California.
My name is Faris Ghandour, partner at Wamda Capital. I'm taking my father's place, as well as who's the GP of the fund, so sorry to disappoint, but I think I've got the bases covered.
I would rather have you than your father.
Yeah, thanks. I appreciate. Yeah, new blood. I keep hearing about new blood. So
yes, there you go.
I kind of hope I can bring.
That's the spirit.
Hi, my name is Ron Cao. I'm a founder of Sky9 Capital. We focus on early stage technology investments in China. This is my 5th time to Abu Dhabi, so it's great to be invited. Thanks to the Milken Institute. We focus on really technology investments, early stage, Series A, and this is our 3rd fund that we're actively managing, roughly $600 million under management. Thank you.
Abdurrahman Tarabzouni, I come from Saudi Arabia. We are STV, Saudi Technology Ventures. It's a $500 million fund anchored by Saudi Telecom, the region's largest telco, which is majority owned by PIF. STV is a new fund. We're going to be region, stage, and sector agnostic, all within tech. The thesis of the fund is to invest in white spaces in the Middle East and globally, where the telco assets are going to be a major differentiator / growth lever for sectors that we believe can benefit from such an unfair advantage and get them from subscale to scale. Very excited about coming in, and we're going to be partnering with the many global institutions around the world to make the venture ecosystem in Mena better and hopefully scale faster.
Great, excellent. So I want to jump right into our discussion. And what I intend to do today is basically talk about how governments can basically motivate their ecosystems and foster a successful innovation and startup ecosystem. And then I also want to focus on the private sector and how we can motivate them on getting more involved in this asset class. Faris and Abdurrahman, both of you are leading forces in the MENA venture ecosystem. In your opinion, what should the roles of the MENA governments be in fostering a strong innovation and startup ecosystem across the region? And basically, I'll start with Faris. I want to learn about sort of the UAE's experience, the government there.
Sure.
And then with Abdurrahman, the Saudi, and what they've done there.
So your question is what the governments can do, right? Not what they've done, particularly today. So I think if you look at all the bigger kind of tech hubs globally, where fundamental deep tech comes out of, similar to what Sky9 invests in, there's a massive layer before that. Before you get to the stage where you can commercially go in and say, here's a check, make me some returns, create a business model out of whatever it is you've built to date. There's a very significant layer of financing that comes from much more patient capital in the form of R&D by way of government subsidies. So if you look at the US, you've got DARPA. If you look at China, you've got the Chinese Academy of Arts and of Sciences. And these are massive multi-billion-dollar funds that have effectively seeded what's now the tech ecosystem in their respective countries. I think key And key for technological independence, and in order for the Middle East not to continue to build necessarily businesses that are, innovative copycats of what's out there. Not that there's anything wrong with that. That's primarily what we've invested in so far. But key to transitioning to a technologically sustainable, a deep tech culture is a government investment in infrastructure and subsidies and in grants. Because that stuff takes a long time to build. And you don't necessarily have to have liquidity horizons per se, the same way private money does, in order to see the fruits of that. The fruits of a deep tech ecosystem are in the form of, employment, migration into the country, citizen well-being, very much like what you have in Dubai. It totally misses my mind. I wish I had remembered the name. A good friend of mine, or a good friend of my brother's actually, who's an Emirati but went to school in Amman, is working on an Abu Dhabi initiative now whereby they go into private academic institutions and they provide the financing for deep tech R&D incubators in those educational institutions. So the name totally misses me. Give me a few minutes, I'll think of his name, but that's the kind of thing that hits right at the core. So you have stuff as well, like in Saudi, like the Kaust, but that's a pretty siloed kind of initiative in the sense that people are parachuted in, but whereas what we're doing out here, what the UAE is doing out here is creating a lot more longevity in that. So I think R&D spending is key. I think the ease of doing business is absolutely key as well. And the beauty of the UAE model is in the free zone model, in allowing people to come in and basically own and feel entitled to and feel a commitment towards a business that they've helped build. And that has obviously put the UAE in light years ahead of other countries in the region. And that's effectively what allowed the UAE to position itself as a hub for maybe anything within a 5-hour flight. Is because it's very easy to do business here. There's relative stability in corporate law, though there are a couple of things that do need to be worked on. So, liquidity or bankruptcy laws or something like that. That's absolutely key. But I mean, we're miles and miles ahead of what is within a 5-hour flight, say for India for a second, and within a 5-hour flight, say for India, you're talking about 1 billion plus people. So the UAE is effectively a hub just by doing something as simple as allowing foreign ownership and creating free zones that are, sort of sector specific. That has allowed us to really, allowed the UAE to punch much, much more than its own weight. And immigration obviously is at the heart of that. So there's another point, which is cross-border mobility. I think that'll hit us in the long term. I think it's absolutely key for Mena, specifically the Gulf, and the Gulf has it to a certain extent, but it needs to be enabled to a much larger scale, where cross-border mobility of both talent and goods needs to be a lot more fluid. So effectively operating in the region, as, feeling like you're part of one country rather than 22, to a certain extent, disparate countries. But I think government has played a significant role here. And will continue to play a significant role. But ultimately the commercialization, which is the creme de la creme of this long cycle of tech, happens in the private sector, which is totally fine.
And as a government official, I can at least tell you, you've mentioned bankruptcy law, and that's coming out very soon, because at the end of the day, it is extremely, extremely important for governments and for countries to have a proper legal system in place to protect those entrepreneurs and help them innovate. Abdurrahman, I see you nodding your head as he said Saudi Arabia. Your experience.
Very much agree with most of what Faris said. He touched on a significant point. MENA, in the grand scheme of things, in the global scale, is a sizable enough market, but really will only move the needle for businesses when you look at it as a single cluster. So you need to remove all barriers of cross-trade and enable entrepreneurs, whether in MENA or even global players, to be able to tackle the market in a scalable way. Let me take a step back. I guess one thing that really drove us to the realization that it's time to make such a large and concentrated investment in the region of $500 million, of which most of it is going to go in region, is the fact that Middle East, North Africa has probably one of the world's highest dichotomy levels when it comes to digital supply and digital demand. On the demand side, you have one of the world's most sophisticated consumers, high penetration rates when it comes to internet and mobile, high purchase power in the GCC, and a lot of that demand is generating a lot of value that is leaking on the supply side to global players. So when you look at various sectors and plays, you look at things like e-commerce, where 70% of the MENA value is leaking outside the region. You look at internet advertising, it goes up to 90%. You look at things like gaming, and it's 80%. So the summary there is that that demand is not being met by local supply, which means a lot of value is being lost, a lot of jobs are not being localized. And there is a tremendous opportunity to create category defaults, digital defaults in MENA, if we can just get the right ingredients in place. And once you start realizing that and you see that window of opportunity, which is, by the way, not going to last very long, because if we learned anything from the Googles and the Twitters of the world, is that they're very well a machine to be able to hyper-localize and speak the local language. Then there is a timed window here of creating digital defaults in white spaces in MENA. So that's the thesis. That's what we're going after. To enable that, a lot of things need to be put in place. So the first one and the most obvious one is just venture capital itself. When you look at VC, take the amount of venture capital available today. We're not even saying deployed, but just take the headlines. The available numbers, if you add them all together and you divide them by any metric you'd like, whether it's GDP of MENA or number of population in MENA or connected users in MENA, we're one of the lowest in the world, in spite of the amazing demand side story in MENA, right? So, big realization there was, our numbers are so far that if you take that ratio, we're not like half or a quarter away from the global numbers, the global benchmarks. We need to multiply these numbers by 20 to 30 times to reach the levels of Israel and the US. So massive undersupply of venture capital in the region, massive. Number two, in many ways, there is a talent issue, right? It's being fixed, but this requires public-private partnerships. But in many ways, if MENA wants to leapfrog, and a lot of GCC countries are now, that word became a favorite part of their dictionary. Leapfrogs are possible, but then you need to have the critical mass and the density of talent to enable you to go after these leapfrogs. And we're not there yet. We'd like to see armies of artificial intelligence and machine learning engineers and whatnot that enable these kinds of leapfrog applications to happen in MENA. And the third is regulatory. We talk about this all the time. The UAE is a great example of this. Saudi is catching up and becoming a great example of this in many ways. But you have to realize that there's a lot of inertia and momentum that got built into the system over decades in some of these countries because of the fact that they have, what I'd like to call distorted economies because of oil. And in many ways, the oil crunch that the region has gone through over the last few years was a blessing in disguise. So I'm very optimistic. We're bullish on the region. We think in the next 3 to 5 years, we can truly, with our friends like WAMDA and others, create the next digital defaults of the region, the unicorns of the region, and it's possible, and we have the levers and the capital and hopefully the top-down will to make it happen.
Excellent. I hear talent issues. I hear venture capital, and both of them are great examples and solutions for unemployment in the region in the future. Samant, let's go to the West really quick.
We can go anywhere you like.
I promised Ron that I was going to go to China.
You can go to
But
China
as of
next.
now,
Yes.
I still believe that innovation lives in America. I believe in the US sets the trend. So what can the MENA ecosystem learn from the US's experience? And in your opinion, is there any room for improvement there as well?
There's always room for improvement. Actually, I agree with a lot of what I heard about ecosystems and how you develop them and the kind of fundamental infrastructure that's required. But I'll also tell you another story as I was thinking of what I was hearing. I have a very good friend of mine who's a few years younger than me that became the youngest cabinet minister in India. And he was made the Minister of Information Technology and Telecom. And I hosted a talk for him, something like this, and he came to talk, and I said, so why is India doing so well in technology? Like, what happened? He said, the real his issue was that it happened without the government knowing it was happening. He said, now we have a minister of IT, watch, it'll slow everything down. Because now you have red tape, you have a director of this, you have a director of that, you have to get this permission. He says entrepreneurs just went out and did it. They didn't ask for permission. They didn't wait for it to happen. They just did it. And so I think it's a little bit cultural as well. You've got to figure out who you celebrate, what do young people aspire to be, how do you treat failure, sort of in the US. One of the things I learned after I started investing in California is that you actually celebrate failure. That if someone fails, he's actually more valuable or she's more valuable for the next entity that they create. And that's a cultural thing. It was harder in India. So yes, the West is definitely in the institutions where research happens, probably the leading country in the world is the United States. And a lot of what you were talking about, Faris, about being able to invest in new science without looking at the commercialization gives rise to opportunity, and that's very true. But there's also, and venture capital availability is probably more an effect, not a cause. It sort of comes later. Entrepreneurship and fostering entrepreneurship is very important. And in this region, you have very strong entrepreneurship base, just like you do in China and India. In India, actually growing up, which was a socialist country, when I was growing up, everybody was an entrepreneur, whether you worked for the government or not. You were still an entrepreneur, because when you walked into a government office, you had to pay the doorman something to go in. He was an entrepreneur. So I think, we have offices in Sao Paulo, we have offices in India. Each one has a different flavor of what they're good at. It comes from culture, comes from where the heritage of technology has grown from, what the country is good at. Most important, though, which I haven't really seen talked about enough here, is you have a base of very large existing companies, whether it's in oil and gas, in manufacturing, in financial institutions, that can be design customers, can be the launch pad for building global businesses. So just about, at least for me, the most exciting thing when I look at is not just serving that market, but what can that market foster that can be globally competitive. So I just leave you with that as sort of, I don't know if that's the question you had asked, but that was my thought when I was hearing.
No, absolutely. I mean, you mentioned celebrating failure, right? Trial and error. At the end of the day, we don't want to lock up anyone here. We want to give them second chances in innovating.
Right.
The whole ability of gaining experience as you move on. But switching gears to the farther east, Ron, I've been hearing a lot about all the unicorns in China. So my question to you is, what's the secret sauce there? Is this merely a function of the size of the population? What has the Chinese ecosystem done better than its counterparts globally?
Well, China is kind of a unique animal, if I may. There's really no place like it. I've been fortunate to be back to China. I grew up in China, back to China starting in 2004. So really saw that, the whole entrepreneurial market, VC market, kind of grew in the last 15 years. It's really no place like it. I think the, in the context of this conversation, I think I would say every region is very different. I think China, certainly, we always compare ourselves to the U.S. For the longest time. Big population, a lot of talent, sort of a lot of opportunities for exits. But now the market is more mature. You can see it's somewhat different than the U.S. U.S., 80% of the unicorns are in Silicon Valley. So if you're not in Silicon Valley, chances are you're not going to, make a big outcome. It's still the case today, even though L.A., New York is done well as well. In China, it's 3 cities, Shanghai, Beijing, Shenzhen. It's, that's 90% of the unicorns in China. U.S., over 60% of unicorns are enterprise types of investments, data centers, cloud, SaaS. In China, it's 95% consumer. It's really about e-commerce, social. Another difference, in the U.S., there's a huge sort of talent pool around the university students, graduate students out of Google, coming out of Stanford, Drew Houston out of MIT. So a lot of the young people actually make up a lot of the successful stories. In China, almost zero coming out of universities. Even though when we first went into China, we say, hey, maybe it's the same type of ecosystem around universities. That turned out not to be the case. And if you look at it, it makes sense. Universities in China are a little bit different than the US in terms of how they educate people and think about taking risk and entrepreneurship. So they tend to be more older, 28 to 35 is where the unicorns are happening. So I think, overall, I think every country is a little bit different. Certainly China, it's really about population. It's really, if we're looking at a social deal, social networking deal, we don't think about daily active users in the millions. We think about, can this be a 100 million daily active user platform, right? That's the benchmark to make an investment. It's kind of scary. You can't do that anywhere else. In e-commerce, we don't think about, can it hit 300 million in sales? If you can't, you shouldn't even think about it. Can it hit 3 billion in 3 years? So it's a larger scale. At the same time, it's very competitive. There's a lot of money coming to China. China is, $40 billion now in terms of capital deployed. I remember the days where it was less than $1 billion. US is 70. I think we'll overtake US in a few years as well. So I think, for this region, I'm not sure, I don't know the region well enough, but, certainly you can think of Singapore, think of sort of Israel as sort of as proxies of what to do in terms of, Israel has done well in terms of providing really deep technology solution for the rest of the world, exporting technology. Singapore's done really well to be an investor in some of the leading markets. GIC is an investor in a lot of the leading funds around the world, and learn from that and start investing alongside of those guys. So those are two kind of obvious, very different strategies around participating in the sort of entrepreneurship movement around the world, really. So.
I used to get excited about unicorns. Now I'm excited about $3 billion companies. And I think the term I heard yesterday was triacorns. So
yeah.
We're looking forward to those. We'll see. Faris, I want to shift my discussion to the private sector, to the LPs, to the investment side of it. LPs in general tend to focus on regions with higher exits and higher acquisitions. They say there hasn't been much in the MENA region. We've recently seen Souk get bought out by Amazon. We're hearing Kareem's valuations and a possible IPO in 2019. How do you see the future in the region with regards to exits and acquisitions?
I think that's a very good point. That's a very good point to bring up for three reasons. And I think the LP question is a separate question. The way we look at LPs, we were talking about this morning, is there's two sets of LPs. There's a set of LPs who are strategic, and that was our first fund LPs. So the IFC, Zain Group, and each are doing it for a different reason. Abraj, among many others, not to leave anyone out. But the second set of LPs are those who are in your fund, and this is just emerging markets. I mean, in the US, I'm sure it's like they're in you for money. But out here, at this point, it's the second set of LPs are the financial LPs who know that you're going to make them money, and that's the only reason they're investing. We're at a significant point now. So when we were raising our first fund in 2014, we closed in 2015, it was purely strategic LPs. People who believed in the story, who were willing to have patient capital, maybe not make as much returns, though they're going to make plenty of returns with us. But the total pool of money around was about 200 million. If you look at the amount of money that's going into VC by the end of the year, I'd say 2018, that's going to be well over $1.5 billion, if not $2 billion, in venture and venture-like, so corporate VC type money. Now, in absolute terms, that looks great. 3 years, you're more than, do the math, 5, 6, 7 times the money. In relative terms, as Abdurrahman said earlier, it means nothing, because the supply of, so in this case, the demand for the capital by entrepreneurs who are equally as qualified as they've ever been, if not more qualified, has also grown even faster than that. So suddenly the $1.5 billion isn't something to look good, to say it looks good. You have to look forward and say, actually, the $1.5 billion doesn't cover the demand side nearly as much as even the $200 million did 3 years ago. So on LPs, I think we're getting to the point where people actually think about wanting to make money in the region. Exits like Su, which we'd invested in, Kareem, which we've also invested in, is unicorn status, and a bunch of others that are. I think we've done the exercise in turn. I think we've got about 15 companies in the MENA region, all based out of the UAE, by the way, that are, except for one in Egypt, are 100 million plus in valuation. I think that's our benchmark for the most part of success. You build something, you build it with scale, and you build solid economics for it and solid fundamentals, and you will find an exit. Just as an example, so Kareem actually has, and we've done the benchmarking, has the best unit economics out of all global and developed market ride-sharing businesses. They're actually just about at break-even on contribution margin. But the fact that they were in the MENA region maybe had commanded a multiple on investment. So, in this case, it was a revenue multiple, much below what someone like Grab would have commanded in Singapore. Even though if you were to normalize things, venture capital in Grab was effectively a rider subsidy. You put money in as a venture capitalist, the company takes the money and gives it to the driver. You're literally subsidizing the business operations. I think the MENA region has solid companies, solid fundamentals that will exponentially show how much exits we can get. A good way to think about this is tech is exponential. Tech adoption is exponential at the consumer side, which means that it starts out very kind of nascent and then it skyrockets up. If that's the case, and that has been the case in terms of internet adoption and mobile penetration here, and especially mobile data penetration, the growth and demand for these businesses that serve these customers, so e-commerce, new media, YouTube, what have you, has grown exponentially, which means that you've got an exponential growth in capital that needs to go in, and an exponential scale in the companies that have come out. So just because the exits haven't come, we can't look at this linearly. You say, okay, there's been one exit, so maybe there'll be 2 this year. Well, no, actually, this year there's going to be 5. Next year there's going to be 20. I'm just using this year as a benchmark. Could be in 2 years. And then the year after you might have 50. It's just the way tech grows. It's the zero marginal cost to acquire a new user for a tech business means that it can scale exponentially, and which means that these companies will achieve scale exponentially, and which means that exits will come exponentially.
Abdurrahman, you guys were early stage investors in Kareem. Anything you want to add here? How can we motivate these LPs that are critical of the region and don't want to come here and don't want to invest here?
One interesting thing about Kareem is that, Kareem is a MENA champion in ride-hailing that is now seeping into emerging markets, Pakistan and Turkey, has become a market leader in Saudi and the GCC, and is founded by a Pakistani, a Swede, and a Saudi. So, and Mudassir and Magnus are not from the region, and they cracked the region in a very big way. So there is a point about talent there and being able to get the right DNA to actually crack very hard in what seems to be on the outside hard to penetrate regions by what Mudassir and Magnus and later Abdullah were able to do. But, I agree very much with what Faris said. I guess, in many ways, when we look at the region, we segment the world into what we call core tech and emerging tech. So the core tech is your table stakes, the things that need to be there to enable a thriving technology ecosystem. Things like logistics for e-commerce, digital content platform distribution, fintech, digital payments, peer-to-peer lending. These are infrastructural plays in nature that the region will need and will always need, and probably in plays that go and pursue these value pools in the region are going to be able to build some sort of a very deep moat because of either regulatory or other advantages that they can get. So those we really like and we think the region needs, and the governments are very much now transforming to say we need to make these things happen, and ideally have the private sector play a big role in enabling them to happen. Now, a tangential, comment here, I think one main concern we have on the private sector is the intervention of government sometimes in some of these cases. And the thing that we keep on saying is your role should stop at building platforms that enable these plays to happen, open up your data pipes, but let the ecosystem build the actual consumer-facing engines for these. And then when you look at frontier tech, things like AI, machine learning, self-driving cars, these are things we think are core and critical to the region's leapfrog agenda. But the region is probably not going to have enough of a scale in terms of exposure and activity in those spaces anytime soon. And we're, it's a tough one because we'd like to start doing some demand generation for these kinds of future applications in the region. But then again, you have to think unconventionally about how to ignite some of these use cases. So when we look at the region, we think bucket number one, core tech, is a no-brainer, infrastructural plays that are going to enable the ecosystem, platforms, lots of government alignment. On the second, we think we're going to have to think of, all sorts of creative ways of getting the East and West to, contribute to building such plays in region and probably leverage some unfair advantages we have. So I'll give you an example. So we look at things like drones and machine vision. And we were always thinking, what's our value add when we go to Silicon Valley or the East in terms of getting some of those, either soon-to-be category leaders or category leaders to look at the region. And I think one interesting, both good and bad symptom of how the GCC economies are structured is that a lot of these are government-owned. And what that means is that you can essentially do some form of demand aggregation across state-owned enterprises, identify use cases across your oil assets and your agricultural assets and whatnot that can go into, say, a machine vision surveying drones play and say, I probably, if I can consolidate demand across my state-owned enterprises into a single drones IoT kind of play, I can create massive value in terms of multiples and can go and create a global champion out of my state-owned assets. So, long story short, we have to be very creative, and probably this is where we're going to need a lot of alignment with governments and sovereign wealth funds in the region to enable us to get a seat at the table on the emerging and frontier tech stuff. The core tech stuff needs to happen today, if not yesterday, and I think all of us are trying to make that happen.
A lot of opportunity here in the MENA region, as you've heard from Faris and Abdurrahman. Sumant, I'm very much aware of March Capital. I'm very much acquainted with your track record. Where else do you guys invest? And is there any plans to invest in the MENA region or any plans to partner or even scale up some of your portfolio companies to the region?
I think yes, because we already are and have at least parts of it. But, I started investing in India in 2006. And I was trying to remember back to 2000, 2001, 2002, and we had similar challenges as you're talking about here. And there are normally, I don't think LPs as you can just put them in one bucket, but in general, if you talk about people who invest behind markets, they invest behind inflection points in the market. And I'm sure, there's an inflection point that you can think of around China, but there's in India, the real inflection point seems to be happening now, sort of 10 years, 15 years after what people thought it would be. And that was really the adoption of broadband and somebody launching something in digital payments and all the kind of stuff that makes things happen. So we invest globally. We have a mandate. We can invest anywhere we want. Now we effectively start investing in areas that we understand and have local partnerships in. So our our companies in India have a certain flavor. Either they have a very strong deep science base to them, because India does have very strong deep science talent, but always have some services component to them, feeding the world. Or we have companies that are being built to serve the Indian middle class, which is about, I'd say, 5 years behind, or 1/4 the size, maybe 1/5 the size of where China's middle class is in terms of spending power, similar size. And so we have the largest payments company in the country. And now that payments company is expanding into Indonesia, into Vietnam, but it's going there as its customers, which are companies like Facebook and Amazon and others, are taking them into different regions. So in effect, we are now in business in those countries. We also have a very strong partnership with the government of Malaysia, who's an investor, a sovereign wealth fund that's in Malaysia. And so we have some, now business there. But you always sort of think about how do you want to expand what you do without losing what you're good at. You have to effectively do it organically. I don't think it's so much a, let's go attack this region versus, we found a unique way, a unique partnership, unique insight, and can we play that? And that sort of becomes the way we progress in a certain reason. So, we have a company that's doing, in fact, it was very interesting hearing you talk about the oil and gas business, because our company does do artificial intelligence, machine learning on manufacturing facilities. And one of their largest customer happens to be Saudi Aramco, who is also a co-investor with us in that company. And they have bought that company into this region. They have another one that's a very large leading cybersecurity company delivering security from the cloud. And they are looking to expand here. And I think maybe working with KBBO in some ways to see if there's a partnership.
Their CEO is right there, Yazan Abu Kalal. You can have a chat with him later on.
I think Yazan knows about this company, and we've talked about it, yeah. But they're still trying to figure it out. To be honest, if we have local partners, then it becomes easy for our portfolio to expand into a region and grow their business there. We are sitting in the US trying to imagine things. We're going to end up with the least common denominator, which is probably not the best path for our company, right? So whether we invest in a certain region over time, getting to know it, or we have portfolio companies that invest by putting local presence there, growing their business there, really is something we're excited about, and that's why I'm here, and hoping this will lead to the next stage.
Ron, last year, China's Didi, the car riding company, invested in Careem. Do you think we will see more Chinese angels, VCs, and corporates investing more and more internationally? And is Sky9 looking at the region, either from an investment point of view or even scaling some of your portfolio companies to the region?
We focus on early stage, and early stage is really a people business, talent business, discovery and talent. So we're very much focused on China region, Shanghai, Beijing. But having said that, a few things that's going on today. One is because the China, especially the internet market, is so competitive that I would say, I think it's fair to say, China has produced some of the most dynamic, most brilliant internet entrepreneurs in this world, right? So, and they're seeing opportunities outside of China that are compelling to them without them leaving China. So some of the leading apps in the US, surprisingly, you open it up, they're all American apps, they're run and made by Chinese companies. I think there's going to be more and more of that, perhaps going forward. Chinese companies going after the global market. Perhaps this part of the market is interesting for certain type of things, for internet or for e-commerce. One of our portfolio companies is focused on cross-border e-commerce, starting with Southeast Asia. They're coming here to this part of the world. And by the way, when they come here, they want to bring their own logistics company over here. They feel the logistics service here is not quite up to par to the sort of the competition in China, where everything's delivered one day. 3 days is crazy. Like 1 day is the benchmark. So they bring other companies over. So I think that's an interesting phenomena. So we're looking outside of China to that extent. Two, I mean, the panel right this morning on blockchain and crypto. I mean, that's just fascinating. I mean, I thought it was a great panel. A lot of insights there. The world is where a lot of things are countryless, borderless. So for blockchain-related investments, we're forced to look at things in a global scale. right? The entrepreneurs may be based in Shanghai or Silicon Valley or even here, but can we offer something in China, whether it's the market opportunity or perhaps just the environment to have more talent? We have to be open-minded and not just say, hey, that's, CEO kind of roams around the world, I can't really do him or do the investment, but look at the trend in technology that are very breakthrough. So, but the other comment I would make is that the large Chinese corporates have big global ambitions. I mean, JD's CEO spends the whole week in Davos talking. I mean, he's got global ambitions. DD is buying companies. Tencent made a lot of investments in the US. Jack Ma is everywhere globally. So I think that's interesting to the extent that, the Chinese big companies can be potential acquirers for, technology companies with interesting business models regionally around the world. And I think that could be I think that trend could be bigger than people expect going forward.
Sumant, Abdurrahman mentioned sovereign wealth funds, and so did you briefly. MENA sovereign wealth funds are now exploring investing in VCs. From the UAE, the Abu Dhabi Investment Authority have been doing it for a while, over 2 decades now, and they've done phenomenally well. Mubadala Ventures just opened up their offices in Silicon Valley, so I'm very excited that this happened last year. Dubai Holding is also exploring the same sector. But these sovereign wealth funds are not necessarily going and investing in the well-known marquee funds. They actually are looking at second and third tier funds. And most of them are even focusing on micro VCs. Some are even thinking of going directly into deals. What advice would you give those sovereigns? What should they do? What should they not do? What should they watch out for when they're accessing those global markets?
I mean, this is a very open-ended question because I can go on for a day. But the real sort of thing to remember, at least in the world of venture capital in Silicon Valley, like venture capital in China or venture capital in India or other places like Israel, is that they are very tight clubs of people who have been doing this for a while, LP-GP relationships that go back decades. And though there are changes on, let's say 10% here or there, 20% here or there, those are pretty well set in the ways they do things. So for any new entrant, you have to be very careful in how you play the market, because what happens, if I go to China today to try and invest there, I'll probably see the company to invest in that 50 funds have passed on already and not a good investment because they've been there longer and everybody knows them. And I think for any new investor, whether it's sovereign wealth fund or otherwise, you have the same issues. There was this, I would say 5 years ago, there was a lot of excitement around micro VCs. And is that a good strategy? It's good for the ones that did well. It's not good for the 90% that didn't. So there's like anything that is new and exciting, it takes a good half a decade to a decade to know what's working or what's not working. The way we work with our investors is really in a close partnership. And this is different from the firm that I was running before this, which was a more traditional LP-GP relationship where my investors were pension plans from the state of California and Michigan and the university endowments such as MIT and UC Regents. But we have a group of 5 to 7 meaningful LP relationships. One of them happens to be a sovereign wealth fund. The rest are for big family offices and some corporates that have an interest in what we do, which is I want exposure to artificial intelligence, cloud, the industry 4.0, Internet of Things, call it whatever you want to call it. Now, of course, everyone wants me, everywhere I go, everyone wants to talk about Bitcoin and blockchain to the point I want to pull my hair out.
We're going to come to that in a bit.
Yeah, so all I'm saying is there is, and then what happens is we allow them to get engaged in those areas, become their trusted friend, advisor, source, and then provide them opportunities to invest directly in companies later stage, which is the model for the firm, which is kind of unique and different. So it's worked for us. When Mubadala opens an office in the Bay Area, they've got 10 years, 15 years of good relationships. Good. So they're doing the right thing, and I think they'll do well at it, and they've done well in the past. But someone brand new flying in trying to think of how they're going to impact by throwing money around is probably going to get, money wasted. One quick point I wanted to just say about China. China is a unique market, there's no question. It's a fantastic market, I wish I knew it better. But India has suddenly become a playground, a battle between the Chinese majors and the US majors. And that's where this world of technology is headed, I think. And that's where I think when you are having homegrown companies, you have to really be careful
Yeah.
because these guys have, the amount of money they have is incomprehensible. Like the fact that it's almost like it's free money. That money exists in this part of the world too.
And the Chinese
But they've given it to
won
the
Southeast Asia battle
That's
against
right.
the US.
Yeah,
Now
and
it's just a question of Alibaba versus Tencent there.
or
It's not
SoftBank
even,
now.
Yeah,
Or
yeah,
SoftBank,
yeah.
you know. So
Soon.
the kind of money that you're playing with is sort of not venture capital. You can't call it venture capital in any way, shape, or form.
I'm glad you're making that distinction.
Yeah. But anyway, that was at least one thought I had.
Abdurrahman, corporates, corporate venture arms, corporate venture departments. I've been in the US for 9 years. I'll invest in any company where I'll see on the cap table a corporate venture arm. So GE Ventures, Boeing, Comcast Ventures, Qualcomm, even Lockheed has it today. STC have been sort of the forefront in the MENA region, investing in venture capital. There's still corporates, even in the UAE today, that are resisting technology. These guys have a lot of cash on their balance sheets. How do we motivate them and tell them, don't resist it, don't resist your competition, invest? From your experience, what are some of the advice or what are some of the ways we can motivate these corporates to get involved in the MENA region?
Great question. It takes a lot of conviction at the top to make it work. In many ways, what happened with SCC is I think there was a clear and strong conviction at the top that we need to transform. And a realization, and this took a lot of guts, and you know, they deserve credit for this. You have to quickly understand your limits as a corporation. And you have to understand that the DNA that got you to where you are in your core business is a very different DNA than the one you need to have to crack new adjacencies and new avenues of growth. In many ways, there is a paradox of efficiency and creating shareholder value, right? Because the more you optimize for your margins and operations to be a telco, in the case of a telco, the less you are able and the more you are susceptible to disruptions, coming, above you and around you. So I think realizing that is a key component of saying, you know what, then what's the alternative? And once you start having that mindset, interesting things can happen. And this is not a telco-specific phenomena. This is a universal phenomena. Even places like Google, had to say, how can I build independent arms that are autonomous enough to pursue new value pools and new businesses that Google Google the corporate, is not probably best positioned and has the DNA to go after. So this belief in allowing autonomy to the right set of DNA to pursue new pools is extremely critical. And with SEC, that's what happened. So the board and the leadership of STC decided it was time to get the right DNA in place, give them the right amount of independence to go and pursue new value pools that are highly relevant and could be actually disruptive and competitive to the core business. We came in and we had some very strong guidelines. So one, we want to be telco agnostic and competition agnostic. So anything we'll invest in can be used and co-invested with by any of SEC's competition. And the board had the foresight to say, your area, and the things you're going to go after are risky and might be small today, but it's what we want to get into in the future. So go ahead and structure this as a best-in-class GPLP, and that's what happened. But then again, doing it as a classical best-in-class GPLP with all the independence and whatnot, and also, structuring it as a single bottom line fund, because that's what you want. You don't want to come in with the baggage of having strategic KPIs and corporate alignments that are probably going to hinder your ability to make investments and move fast. With all of this, you still need to find an angle to give back to the corporate. And the way we structured it was, kind of elegant in a way. We said, all the things we want to enter in, And the unfair advantages we want to bring to the portfolio companies that we're going to invest in are actually telco assets that we need access to. So telcos have distribution to all their subscribers. They have the network, and they can zero-rate applications. They can give immediate access to, tens of millions of subs to be active users of an application overnight. They have all the data that goes through the pipe. So all the consumption and time you spend online as a user, whether you spend it on Google, Facebook, or Twitter, or any other site for that matter, is actually going through the telcos' pipes. And telcos now have built enough capabilities internally to be able to extract so much insights out of this. And the third really is carrier billing. Carrier billing, so payment is a huge barrier to scale in the region, low credit card penetration and whatnot. So suddenly, you have amazing distribution to tens of millions of subs. You've resolved all kinds of payment bottlenecks for any digital service that needs payments. And you have all the data you probably will need to be able to target and identify and segment customers in a certain market. So if you open up these three assets to your investment portfolio, you have quite an unfair advantage. And that's what happened. So the thesis is we're going to operate in an independent way with the right DNA, but we're going to maintain back that positive feedback loop into the telcos by using the assets, and it's a virtuous cycle.
Gentlemen, we're about to wrap up. I have 2 more minutes, but before we do so, I have a couple of things that I want to cover really quick. So I'm going to mention a keyword, and each one of you will have 15 seconds to say something about it. So I'm going to start with Sumant, artificial intelligence and big data. 15 seconds.
Fundamental part of everything that we do, part of every piece of software that's going to be written for the next 10 years, 20 years, 30 years.
Nice.
But artificial intelligence.
And big data. 15 seconds.
The new oil,
Okay.
I guess.
I can live with that. Ron?
Well, it's a key investment focus for us, really, the building of intelligent systems. It's going to drive a lot of returns in the next 10 years.
Abdurrahman?
A tool and a product, but not a destination.
Blockchain technology, Sumant.
Also fundamental, just starting, completely misunderstood by majority of the people who read about it, but will change things dramatically.
So cryptocurrencies specifically and decentralized ones are paradigm shift to the extent that they will change the way middlemen function, if at all, in the future.
Ron?
This is the technology of our generation. This will generate more returns than we ever can imagine.
Abdurrahman?
We don't understand the ramifications of it fully yet, and I think we're seeing the beginnings of a transformative topology of a new kind of platform.
Cryptocurrency, Sumant, and don't pull out your hair.
Ponzi scheme.
Ouch.
I mean, no. Not a Ponzi scheme at all, but what's priced in today is a lot more than what it could deliver over the next year.
Ron?
Well, we like the fundamental building blocks of the blockchain. Some of those are being realized in crypto, but overall, the digitalization of anything, assets, ideas, is the fundamental, technology behind. Is driven by blockchain technology. That's going to be very transformative.
Abdurrahman?
It's the same as the last one. The killer use case is yet to be seen, but I'm sure many will come up in the next few years.
Great. Do I have time for questions? I do? I don't.
None?
Okay. You guys can catch these guys outside. Great. Thank you all for being here today.
Thanks so
much.
It's a pleasure. Thank you very much.